Hello everyone, I'm Stephen Frazer and welcome to the latest edition of the Sharesify Talks Shares podcast. I'm joined as usual by my partner in crime, Ian Conway. Hello Ian.
Hello Steve, how are you?
I'm very well, thank you very much. So it's going gangbusters on markets globally. S&P, Nasdaq, FTSE, Eurostoxx 600, they're either at or very close to all-time highs. And strong earnings this quarter have really been driving that. You've been looking at some of the details, haven't you?
I have, Steve. Yeah, I mean, as you say, markets are at highs. You've got the FTSE's now comfortably above 10,000. Remember, we were ringing the bell on that a couple of weeks ago.
Indeed.
We're sort of 10,200 and something now. S&P is at 7,000. MSCI World is at an all-time high. And as you say, we've had some good company reports. I think something like 80%, FactSet was saying 80% of earnings have now beaten forecasts.
Right.
So you can say that's great. What's slightly confusing me is how calm everything has been, while this is going on, because in the background you've got the dollar at a 4-year low against the euro. It's a 10-year low plus against the Swissy. You've got trade policies all over the place. Obviously, Trump's now threatening Canada and South Korea. You've got another potential US government shutdown from the 30th of January. Funding includes the Homeland Act and so on and so on. So
I suppose here as well, I mean, throwing another curveball in is that while earnings have been strong so far, and that implies a risk-on sentiment from the market, ultimately gold is at an all-time high as well. I mean, I was just looking at the data on the live price and it's just gone over $5,300 an ounce, which tells you there's an awful lot of appetite for de-risking portfolios. So that's another variation in things.
As I say, yes, as you point out, dollar's at a 4-year low against the euro, a 10-year low against the Swissy. I mean, normally you would be putting money into Swiss franc. That's happening. If people want to de-dollarize, they go into Swiss franc. They'd normally go into the yen, but the yen's been very, very weak as well. So they're moving into dollars, up 25% this month, I think, gold price. It is unusual. But what's even crazier is the silver price is up 50% this month. So there's this rush into precious metals. And normally you get this kind of behavior when investors think there's going to be a rise in volatility, but there's no sign of this. If you look at the VIX index, the classic fear index, sitting at 16, and it's been around there for ages. It had a little wobble back in October, November, went up to 25, but it's not at the levels that we saw last April, for example, where it hit 50. And the VIX is the implied volatility of the S&P 500 over the next 30 days. And so when people think volatility is going to go up, they start buying the VIX index on the CBOE. And at the moment it's showing almost not complacency, but it's showing no real concern at all. And as I say, markets at all-time highs.
Well, I mean, what is going to be really interesting is what's happening this evening. You've got the start of 10 trillion worth of market cap reporting over the next 2 evenings. So tonight we have got Microsoft, we've got Meta Platforms, and we've got Tesla. Now Tesla's not such a big deal, simply because we've had delivery numbers from them, and from delivery numbers you can imply something about revenues and earnings. But I mean, Meta and Microsoft are going to be massive indicators in terms of whether or not earnings are very strong and whether or not valuations are upward events or underpriced events or overpriced events. So really going to be an interesting session after hours. And then tomorrow night, of course, we've got Apple also after the close of business. So I mean, this really sets the stage this week to send a strong message across global markets about whether we've got more in the tank or hang on a second, we need to really think about valuations. So that should be a real indicator.
And as we've said before on this podcast, what investors have to look at is not just the earnings, but the outlook. Because that's what's tripped up a few companies this week. Yesterday, we had United Health, and the sales outlook for 2026 was well below the market forecast. Stock got absolutely hammered.
Yeah.
You
And it
know,
wasn't alone. I mean, CVS and also over in Europe, LVMH, the big luxury goods brand business, also taking a bit of a pummeling on exactly that. It's really about guidance. It's not about last month's earnings or last period's earnings. It's about the guidance.
And you can look at the UK market. We had Doc Martens, which we were riffing on last week.
Yeah,
unfortunately, Docs is kind of getting there. I just think progress is a bit slower, really, than the market wants. You know, the new CEO keeps talking about sees his green shoots and he's got his levers for growth and so on. But the sales outlook just really didn't come up to scratch yesterday. So the stock got,
it's been in a really tricky place for a long time now, hasn't it? It's been trying to find these kind of growth levers, but it just doesn't seem to be able to do it.
Yeah, and then you had Evoke, the gaming company. So they own William Hill, they own 888, Mr. Green. They actually withheld earnings guidance, and the market really didn't like that at all.
Yeah,
they got absolutely clobbered. I mean, we've had some decent updates this week from UK companies. So Mighty Facilities Management. I mean, they say, you know, boring is beautiful, and what Mighty does is it just helps people manage their facilities. So it could be the US Navy, it could be Sellafield decommissioning, it could be anything sort of grungy. These guys, you know, and they have a whole range
changing
of
light
services
bulbs, you know, cleaning floors.
Absolutely, whole range of services that they provide. Confirmed guidance, you know, just that business cruises on. We had Costain, big infrastructure player. So not only is infrastructure going well, but they've also made a change to their pension scheme arrangements, and that's going to free up a ton of cash. So they're saying the dividend this financial year could be double last year, and they've launched a buyback.
Right, okay.
And
that sounds like it's going to be a sustainable big hike in the dividend rather than just a one-off.
Absolutely. I mean, I keep saying to people, infrastructure's where it at. I had a chat today with the guys at Hargreaves Services. So they do kind of groundworks on things like HS2, Lower Thames Crossing. They're already on site on the Lower Thames Crossing. And these guys, 95% of their revenue for this year already in the bag. Unbelievable for this financial year. This sector, you know, said it before, say it again. House builders, not interested. Look at the infrastructure. If you want a UK construction company, look at the infrastructure firms or firms like Hargreaves. Going
gangbusters over across the pond as well has been CoreWeave. I mean, only listed in March last year. $40 a share. The shares are now up around $90. No, I think they're even higher than that. It's just had an amazing run. Just this week, it's gained 17%, and lots of the news has been around Nvidia investing $2 billion into the business, because ultimately it sees CoreWeave as a crucial part of the AI infrastructure supply chain. So that's obviously really good news. But what it has done is it's really upped the ante for CoreWeave in terms of expectations. So there's going to be a lot more investors really keenly looking at CoreWeave earnings as we move forward to see whether or not they can hit their milestones. Yeah,
it is interesting, isn't it? This whole labyrinth of relationships that are forming in that sector between hardware and software and you know, chip designers and chip manufacturers and so on. Oh, ASML, I meant to mention. They had pretty good numbers overnight, didn't they?
They were very strong, and again, their guidance was pretty robust. And I think it had a pretty difficult year last year, and I think expectations had been had weakened off amongst analysts and investors. And I think now they're starting to build more confidence into ASML and about the capacity, chip capacity, manufacturing capacity that is coming on stream down the line, which is so crucial for ASML. So and a good sign really for the whole chip industry.
Yeah, but particularly for them, as you say, it's having confidence in those forecasts. Because they give fairly punchy forecasts, and it's always a question of is the market on board with these or not, or is there a whisper number that's actually slightly below that. So moving from those to holidays, we all love a quick getaway, Steve. we've got coming up later this week EasyJet and Wizz Air. Now this is interesting because we're getting mixed news on the leisure sector in the UK. There's I was reading a news article saying company that's been around 30 years is going to close down, and lots of customers are going to be kind of trying to get their money back. The thing's gone bust. And then on the other hand, there's a company talking about coming to the market. Have you heard of this? Love Holidays?
Right, I don't know it now.
I just wonder, is there the appetite for more kind of travel and leisure stocks in the market? We've got so many. We've got On the Beach.
Yeah.
We've got so many of these things, and they seem to do a good job already. But apparently, we've got another one coming. So I'm keeping my eye on EasyJet and Wizz and see how they go.
It's an interesting dynamic there, Ian, because it's almost as if you're suggesting we should run our next Sharesify talk shares from perhaps a beach setting. So perhaps we'll have to think about trying to organise that.
Don't mind if I do, Steve.
A few sandals and perhaps a margarita.
Break out the Crocs.
Okay, let's call it a day there. That's brilliant stuff. Thank you very much, Ian. Thank you for listening. And as we always say, please send in your questions and suggestions to editorial@sharesify.com. We'd love to hear from you. And if you're an investment trust fund company, you want to get involved in these podcasts, please drop us a line at the same email address, and we will take it from there. All the best. Take care.
Take care.